Which is better for renovations in terms of loans? Is it a hard money loan or a private money loan? This is a question that all new investors tend to ask with their first few renovations. In today's video, I'm going to show you exactly which one is the best for you, which will save you the most money, and give a breakdown in terms of what they're all about. I'm Josh Savaris, investor and realtor with eXp Realty Brokerage. It'd be so amazing if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you guys are looking to buy, sell, and invest not only in Canada, but anywhere globally, feel free to reach out to us at eXp Realty Brokerage. We are a borderless brokerage because we run a lot of our operations on the cloud, and we are in over 22 countries. So if you need a real estate agent for any of your needs, feel free to let us know, and we'll be able to get someone to help you out. Or if you're in the local market, let us know. We'll be able to help you out. Without further ado, let's begin. Now, first, let's get started with the hard money loan. The hard money loan is a well-known investing tool that investors that are using to fix and flip or renovate a home they just purchased, they can use for their own buy and hold needs. Now, in terms of hard money loan, there are a couple different things to break down here. There is a deposit that you will have to put up front, which is a percentage of the loan, as well as a higher interest rate that you're going to have to pay, which is going to be higher than you would have to pay in any type of A or B type of lenders. Now, how hard money works, there's going to be a couple of different components. There is a deposit, which is a small percentage of what the actual loan is, and there's going to be a high interest rate payment that's going to be higher than the A type lenders that we're very well familiar with. And essentially, these are used for renovation projects where you're going to go about purchasing a property, renovating and flipping, as well as for investors who are going to buy a property, renovate it, and then actually use it as a buy and hold, and then refinance and use some of those funds to help pay for that. For some investors who are going about doing so, it's more for a flip perspective than you would for a buy and hold, because these are very high funds and there's a time frame that these funds have to be paid out by. It's not a 30-year amortization. They're usually about a year's time frame, and some investors will use it for properties that have a great opportunity for a massive refinance that they'll be able to pay back into the property, and some that'll really give them a massive amount of equity and build their wealth in terms of the property type. This is more leaning towards fix and flip types of properties. Now, another thing to look at with hard money loans is an origination fee. And the origination fee is essentially their staff going about compiling documentation and filing paperwork, and that's anywhere going to be along the lines of $1,500 to about $3,000, depending on the lending institution that you're working with. And like I mentioned before, because this is a different type of a structured loan, you're not going to go about having this over a long period of time. So essentially, the whole thing is to get in and get out. So you go about getting a property, use this loan for the renovation or purchasing the property, whatnot, and then essentially what you're going to do is have to pay that off within a year's time frame. For any strategic investor who has some experience, they'll essentially use this for about 4 to 6 months for the renovation period, and then when they go about flipping the property, they'll use the funds needed to pay off that loan, and of course whatever profit need be, they'll keep at the very end. Now, hard money is asset-based lending. You're essentially lending on the asset, so in the event that you're not able to make the payments on time, your property would essentially be foreclosed back to the lender, and they would sell it up to another investor. And these tend to be with smaller investors or small companies or corps that they have funds and they'll be able to invest into their renovation projects, fix and flips and things as such, and be able to get a high return on their money. But they're not the massive CIBC, Scotiabank, T's, the A-type lenders, but there tends to be investors who have money who want to invest into lending and want to kind of diversify their portfolio. Now let's see a real life breakdown of a hard money loan, which in this case, we'll say we're being loaned $100,000, and it's going to be a 5 and 15 point mortgage where we're going to put down 5%, which is going to be $5,000. And then the interest rate throughout the life of the mortgage is going to be 15%. Now we're going to say that there's going to be an origination fee of $1,500. Like we said before, it's providing documentation, it's preparing, and it's essentially an additional fee that hard money lenders are going to use to make some extra funds from you. Let's just say the scope of work is going to take 6 months. So at our 50% interest rate, it's going to cost you about $7,500. So we've got $7,500 plus the $5,000 we've initially invested, plus the origination fee of about $1,500, it's going to cost you a combined total of $14,000 for this 6-month renovation. Now, for some of you, you're probably thinking, hey, that's a pretty good deal on a fix and flip or any type of renovation you're going to do with a buy and hold property. But let's break it down how it would be a bit different in a little bit later in our video in terms of how a private money loan would work. Private money loan is a loan that anyone can essentially give to you. It could be a friend, family member, it could be someone you met online through an investing summit, in which you have a contract in place that states the characteristics of the loan itself. And it tends to be individuals who are looking for a higher return than what the market is giving them, let's say with their pension, their stocks, bonds, savings. So it's a really interesting way that you can go about actually saving money in terms of going through your fix and flip through a private money lender opposed to a hard money lender. And lenders who provide private money tend to be a lot more happier with the return because of the fact that they're getting a much better return than we're receiving from, like I mentioned, the stock market, their pension. So they're more than happy to provide this loan. And there's no origination fee. So essentially, let's say for the same example, we need $100,000, but let's say for private money's sake, it's going to be 20%. We're willing to pay a bit of a higher percentage because in the long term, it's going to be cheaper with private money than opposed to going about it fully with hard money. Because with private money, we don't need to put a down payment, there's no origination fee. So let's say for $100,000, it's going to be a 20% interest rate, but the work is only going to take 6 months. It's only going to cost us $10,000 versus the $14,000 that we needed to pay with the hard money loan in terms of the upfront fee, the origination fee, and the total fee of work for 6 months. So it's going to be a lot cheaper going through a private money route than opposed to going through a hard money route. Just like that, you save $4,000 on your loan payments that you could use towards upgrading the property or just keeping the profits to yourself. As we're knowing with interest rates going up, it's becoming more difficult and more challenging to get through these stress tests and everything taking place in our current environment. However, now more than ever, we're starting to see an increase in demand for private lending and using other people's money through these methods. Reason being is these methods, there's no stress test. They tend to be higher interest rate, but they tend to be a little less stringent on the qualifying parameters, where if you're going to go work with A lenders, they're going to be very stringent on many characteristics, where working with private money and even hard money loan, they're going to more look at the investment that you're going to use and know that there's some sort of return at the end of everything, so they know they're getting their money and they're happy with the money that they're getting, versus with the banks like the Scotiabanks, the TDs, or RBCs, CIBCs. They want to make sure that everything is in a perfect order, that they know that nothing's going to fail. They're going to look at your credit history, they're going to look at your income and everything as such, where with these other type of loans, they're less likely to look at your personal circumstance and more likely to look at the deal on hand to make sure they're going to make their money from that. I hope that video is super helpful and insightful and gives you a complete breakdown as to which is better for renovation, private money or hard money loan. I'm Josh Tavares, investor and realtor with eXp Realty Brokerage. It'd be so amazing if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you're an investor who's looking to learn everything about real estate investing, we're talking about systems, strategies, we're talking about investment concepts, everything that you need to know as an investor, even how to create a personal brand to attract clients and have properties coming to your doorstep, especially distressed properties that you can use for fix and flips and buy and hold. Then guess what? We've got an investor course coming out very, very soon. It's going to be a game changer. It's going to be the top thing on the market in terms of the best investing course that's got everything that you need. Also too, if you know anyone who's looking to buy, sell, invest in real estate anywhere, like I mentioned earlier in the video, we are a cloud-based brokerage, so we're able to get in touch with realtors all over the world, and we're not just stuck to our local geographic. We're in 22 countries all over the world. So if you want to know more about that, feel free to let us know in the comments below, or feel free to email us. I'm Josh Tavares, investor and realtor at eXp Realty Brokerage. Take care.